The Nigerian fintech industry recently has grown exponentially, attracting funding from both local and foreign investors. Even though there are recorded successes of startups in the sector trying to reach Nigeria's unbanked population by improving financial services, there appears to be a high percentage of the population that are still financially excluded. Dr. Yele Okeremi, CEO of Precise Financial Systems, shares his views.
If you take a look at the issue of financial inclusion, the conversations around financial inclusion tend to happen a lot more in economies that are less developed than in economies that are a lot more developed. And so we see that I think the real framing could have been economic inclusion rather than financial inclusion. Because I always say this, and I've said it on your platform a number of times, that it is impossible for you to financially include people who are economically excluded. So if you want to do the easy work of saying that we provided technology to give some more people access to financial services, that makes you look good. But the real heavy weight, heavy lifting work is how many people are we economically including? And if we include more people economically, financial inclusion will find its level.
And in your opinion, what are the factors affecting the growth of this financial inclusion?
In the past, it would have been how many banks or how many branches are close to people, particularly in the rural areas. But today, with the advent of financial technology or fintech, how many people are enabled to have access to electronic banking? So you say access is one of the issues that you can look at that particular point in time. How widespread is broadband? How easy is it for people to be known? Because one of the challenges we still have is that of identity. So banks and fintechs are obligated to know their customers. How much of this do they do? So those are some of the factors. If you look at the issue merely from the standpoint of financial inclusion.
Looking at our financial landscape in the country, how much improvement are we seeing with the rise of fintech companies and startups, like you mentioned? Like, what roles are they playing to help bridge these gaps?
The people we call fintechs, a whole lot of them are doing payments. So you take a look at what's going on in the fintech. I think I will be right. I don't have the statistics, but I think I think up to 70% of them will be doing payments. And you have a few of them who are doing other things like in the space of lending. And I hear a bit of traction in the space of insurance and stuff like that. So a whole lot of people are concentrating on payments. And the honest truth is that any country that wants to solve social challenges are not going to be solved by entrepreneurs and business people. Business people are going to seek profits. But if you want to solve social challenges, a whole lot depends on political leadership. And I'm not seeing so much. So the fintechs, you see a good number of them springing up. And if you want to do success stories merely by the number of fintechs that are springing up, then it's easy for you to say, oh yes, we are doing very well. But what problems are they solving? I think there's a whole lot more to be desired in that particular field, a whole lot more to be desired.
So are you saying the fintechs aren't doing enough in trying to bridge the financial gaps?
The fintechs are doing a lot to make money for themselves. But, of course, to paint a good narrative and to look good, of course, they would say that they are trying to, bridge financial gap. But let's take a real look at it. What are they doing? I've said it, a good number of them are doing payments. What is innovative about payment that NIPS has really not done? NIPS has done a whole lot of work in that space. So everybody is just trying to cut into that space. But I think the real work is in bringing people who are outside the banking sector into the banking sector. And that is real work. And if you want to do that, a whole lot of things have to happen.
You mentioned success stories of fintechs. Now we know that a couple of them have emerged as unicorns. Some of them have even made incredible strides, especially with the amount of funding they've received. At first, it was more of foreign investments dominating the space, but now we see local investors stepping up. How would you say we are doing in that regard?
The fintechs are doing well, making money for themselves, which is, if you ask many of them, they will tell you that their objective is to maximize the wealth of their shareholders. Their objective is probably not to solve some of the problems that you would, or the government would want them to solve. So to the extent that they are creating value for their shareholders, they are happy. And like you rightly said about investments, again, we are playing catch up, we are playing laggards. We have allowed the landscape to be dominated by foreigners. And just like you say, Nigerians, we are used to seeing or investing in things that we can see rather than things that we cannot see. And we've allowed foreigners to come and invest in things that we couldn't see. And now that it is becoming obvious to us, we are buying into those investments at a premium, things that we could have even got into probably at a discount or at par. We are now buying at a premium. And I'm also very worried about that because some of us may actually be buying into bubbles. But again, one of the important things I want to note is that the success stories of organizations shouldn't end by how much they are raising or how much they have. Quite a number of organizations, and I stand boldly to say, a number of organizations are raising money and cash to burn. A good number of them are raising cash and they're just burning this cash, hoping that over time they can write a narrative, they can create a narrative that creates something that makes them look like they can become a monopoly, which may be a mirage. So invariably, a good number of them are burning cash and they may never ever become profitable. So I see people invariably on the long run losing money. But I think one thing that never ever fails is where we see organizations creating value. So if I were, as an informed investor, to take decisions, I would rather take decisions on tech firms that are solving real life problems that can be sustained and that can be multiplied, rather than merely talking about tech firms that are raising loads of cash that are just being burnt in furnaces technically.
What about frameworks and policies for regulation of these tech firms? Do we have enough of them?
A lot is going on there. So you see the central bank, for example, trying very hard to ensure that things are going on well, because you have to understand the role of the central bank governor. The role of the central bank governor is to ensure financial stability. And of course, in ensuring stability, one factor that is very constant is trust. You see, every bank that is running is not just a business, it is trust because it involves public funds. So the central bank governor is always concerned about ensuring that fintechs and financial institutions do not go belly up. So they keep doing things. But of course, one of the things you have to appreciate is that the regulations usually tend to lag behind innovation. But I see today that the central bank is trying, they have very smart people there who also are able to anticipate what may happen. But I think beyond what we are talking about, we tend to be overloading the central bank. We tend to overlabor them, and we are beginning to bring the central bank into domains that are ordinarily not supposed to be their areas. So ordinarily speaking, the job of the central bank governor is to ensure monetary policy stability, ensure that our exchange rate is good, ensure that inflation is under control, ensure that money supply is good. But when we are talking about the issues that I was talking about in terms of economic inclusion, those will have to be addressed through fiscal policies and social policies of government. These are things that no central bank governor has purview over. And so it doesn't matter how hard you work the central bank governor, if the ministers and the federal government, the Ministry of Finance, the Ministry of Economic Planning, the Ministry of Social Investments, and the Ministry of Trade are not doing their own bits, you're just going to be over-revving at the central bank and you still will not get the kind of results you want to get.
Well, thank you so much for joining us on the program.
With all pleasure.